Hey there, everyone, and welcome to this special edition of The Final Bar. It's Friday, April 19th. This is a monthly exercise I've so enjoyed doing with my friend Grayson Roze here at Stockcharts, where we look at some of the key charts to pay attention to. So today we're going to talk about the top 10 charts to watch for April 2024. We're sort of in unfamiliar seating, Grayson, because I'm doing this from home and you're in a comfortable seat that I enjoy, the anchor desk at Stockcharts TV.
Yes, I am the Keller now. So here we are. This feels not weird at all.
I
So good
love
to be
it.
with you.
Well, hopefully we ease into this over time. So
Yeah,
I feel like this has been a challenging exercise certain months. Some months have been easier than others. This one felt
definitely.
remarkably challenging given the sort of deterioration that it feels like we're seeing right now. When you're looking at the market sort of rolling over again today, what's your main sense of things? Where are you at?
Yeah, so it's interesting as a stock picker, as a trader, as kind of a short-term analyst. A little concerned, like you said, not a lot out there that's working at the moment. So this is definitely a challenging environment. So a little bit of frustration there. But when I think about myself as kind of a multi-time frame analyst, when I think out a little bit longer term, I got to be honest, I am cheering about what's happening right now. The bull in me, the longer term bull, is cheering. We had a very unbalanced market for the last couple of months, and that's the kind of thing that concerns me, that drives me nuts. That really actually kind of keeps me up at night. When you have a bull market that is too strong, we had a market that was up, like we talked about this last time, 16 of 18 weeks, something crazy like that.
Yeah.
That's not healthy. That's not normal. That's not the balanced market that I actually want to be trading in. So I got to be honest, I'm kind of cheering right now. And the other thing that comes to mind too is, we see this every single year. The average year, the typical year, what normally happens, we see a 10 to 15% decline at some point in the year. And inevitably, no matter how much data we put in front of ourselves, every time it happens, we always end up being concerned. We always end up being fearful. It feels like, the world's coming to an end. So I'm looking at this right now saying this is a good return to normal, a good return to a more balanced market. And actually, I'm pretty happy about kind of how this sets us up for, later in the year. We can't see a market that just goes up and up and up. So how are you feeling? What comes to mind for you?
Your comments I think are spot on. It reminds me of our conversations with our mutual friend Jay Woods on the
Yeah.
floor of the New York Stock Exchange. And I remember having him on the final bar during one of these pullback phases. And it was a very kind of calm and, you know what, this is actually crazy normal, right? I mean, if you think
Yeah.
it may not feel good on the day that it's happening, but
Right.
a normal year has these sort of these drawdowns. I think the strength that we've seen so far in 2024 has been the unusual part. It's
Yeah.
not what we're seeing now, which is actually quite reasonable to have a bit of a pullback. So my market trend model that I know you're familiar with right
Yeah.
now has turned short term on all the equity averages, still
Right.
bullish on bearish short term, still bullish on medium term and long term. And thanks for popping that up. And so
Yeah, exactly.
for me, that's sort of a pullback scenario, right? That tells you we're pulling back. The longer term structure is still quite strong, and I'm not struggling to find stocks that on a weekly chart look pretty good, but it's just on the daily charts where you're seeing that weakness. And so I think the question now is, what's the difference between a short-term, actionable, buyable pullback, which is
Yeah.
very constructive, versus something that's more significant? And that's where you have to think about, levels of support, lines in the sand, key moving averages. And
Absolutely.
some things are breaking down. And I think those are the areas of the market that you avoid. There are plenty of things that are actually kind of holding up, and hopefully we can highlight a couple of those today, right?
Yeah, I agree.
Shall we get to the first chart?
I think we should get to the first chart, and I think, my friend, you are up with it. What is your first pick?
So this is actually a name that I know we've talked about before as on these monthly exercises, and it's Murphy USA. What I like about this chart, again, what's encouraging about a chart like this is it keeps coming up on my radar. I often scan for stocks making new 3-month highs, and it first came up on those scans back in sort of July, August of last year, which is where you had that cup and handle pattern, right? And I remember highlighting it in September when we broke out of that cup and handle pattern, finally broke above resistance. I mean, it's almost a perfectly constructed pattern. And the idea with that pattern that William O'Neill popularized years and years ago is that when you have that basing pattern and you finally break out, it's a sign of accumulation. It's a sign that buyers are willing to pay a little bit more than they have for quite some time, and it's usually a catalyst for further growth. And what's encouraging to me is even with all the uncertainty we have with the increase in volatility, charts like this are actually still kind of working. So in this, I would say a couple things draw me to this. Number one, we've continued to see an incline after that breakout pattern. We've had a couple consolidations in the fourth quarter of last year. We had another breakout in February. We're kind of coming out of another sort of short-term base. We're bouncing off of an ascending 50-day moving average. And overall, I think this is setting up pretty well. The second thing is this chart is very much an outlier because the average stock right now is not doing this, right? The average stock is not kind of holding up near the highs. It's sort of breaking down through the 50-day, maybe breaking down a little further, and you're thinking about key support levels. If you didn't know the market was correcting at the moment, you wouldn't know it from looking at this chart. And I like those sorts of things that are bucking the overall trend. The momentum also has stayed pretty strong with something like Murphy USA. The RSI's remained above 50 really since early February. So you're seeing pretty consistent positive momentum. The relative strength is starting to improve. I think a chart like this with a breakout that just continues to press to the upside, I treat this as innocent until proven guilty. And I'm not seeing anything that tells me guilty just yet.
I love that. I also love that you're mentioning the RSI because this is just a masterclass in what you want to see from the RSI. I mean, you get that overbought reading, and it doesn't mean, hey, it's overbought, now it has to absolutely crash. It means we need a little bit of pause, we need a little bit of pullback in that momentum, and you've seen that thing just consolidate sideways and, like you said, bounce off the 50. This is a great chart. There's a lot to like here. Good pick.
I agree, and rare at the moment, which is what probably attracts it to me the most.
Right. I got to ask you, when you see an environment like this where we do have the indexes pulling back, we're seeing a little bit of weakness in the market. When you see something like this that just kind of has that strong trend, it just keeps going up. Is there part of you that says, just own the stuff that's working right now? If it keeps going up, just own it because it's trending. How do you think about trend here?
No, for sure. And I think what you have to remember is just if you take off your sort of big picture top-down hat and just think about bottom-up stock picking, generally speaking, I tell people it's always a good time to own good charts.
Yeah.
So focus on the ones that are constructive, focus on the ones that have strong relative strength. Regardless of the broader environment, that's probably going to keep you in constructive names that are working. So again, I think a trend like this is in place until the evidence tells you otherwise. And an evidence-based process means you wait for the chart to tell you this is no longer a name you want to own. I think you're seeing those danger signs on a lot of other charts right now. I mean, I scanned for new 3-month lows. I had almost 300 of them in a large mid cap universe today. So there are plenty of stocks that are not doing this. And I think that's why you want to stick with trends that are working.
Yeah, I like that. Should we move it on?
Let's do it. Your first chart.
Okay. My first one, I'm starting with an ETF here. This is XME Metals and Mining ETF. Pretty straightforward. Stick with what's working. You've got an ETF, a space right now, metals and mining, that is outperforming the market. You can see that at the top of this chart. As we talk about a lot on the show every time that I'm on, I like to benchmark things against the total market index. That's VTI. And so if you're seeing this line rise, that means that whatever you're looking at is outperforming the market. I want to stay in things that have that strong relative strength. So metals and mining has absolutely been flying in the last couple of weeks. And you can see making new highs. Just sort of consolidating here a little bit in the last week and a half or so, but doing it right up there near new highs, and doing it, most importantly to me, above the 20-day moving average. You can see that every time this thing tries to sell off, we've got those big, beautiful hollow candles in here in a lot of these sessions. Every time this thing tries to sell off, we get shot back up. So riding those moving averages higher, I like to see that. This is a space that's getting a lot of attention right now because it's a little bit different than the big tech stocks and consumer discretionary stocks and everything that have been driving the market higher and really driving that outperformance. So specifically, we're seeing things right now like copper absolutely flying. A lot of conversations around copper. So metals and mining kind of brings in a little bit more than just one of those. And I like the move here. I like the strength. You can also see this is a very, very strong scooter score right now. That's our Stockcharts technical rank. One of the strongest ETFs out there. 96.8 is very, very high on the scooter score. So continuing to move higher has basically made a breakout and is kind of making another one here. Made that initial run back earlier this year and is now continuing to find its way to new highs. So metals and mining seems like a space, if we do see a little bit of weakness in more traditional equities, this is a space that kind of brings in some other allocations for you. So I like that about XME here.
It's
That's my
so
first pick.
interesting because I feel like, I mean, metals and mining in particular, it's not been a particularly strong sector on a relative basis until recently. You're starting to see a
Yeah,
lot of them improve. And I mean, generally speaking, things like energy, materials, two sectors that have not been strong at times, but all of a sudden, both of them
right.
popping to the upside. I
Really
know when I
starting to
was
move.
scanning earlier today, about half the new highs that I found, which were not many, were in the materials sector, steel
Yeah,
companies, metals and mining, copper, FCX type of names.
yeah. It's
So
interesting
it
too
certainly is pretty good.
when you look at this thing actually on the longer term basis, you're getting a pretty beautiful breakout on the weekly chart. And the funny thing is there's a little bit of an electric vehicles play in this space. Because there's so many
Hmm.
heavy metals in these big batteries and everything like that that are going to power all the EVs and stuff. There's actually a little bit of a Tesla style kind of tech play in this whole thing, kind of a new space of innovation. So it's funny as crazy as metals and mining sounds when you compare it to clean tech and all that stuff. There's actually a
Yeah.
little bit of a correlation there. So I like this thing on the long term as well. An interesting space to watch definitely right now.
And right now with Tesla and other EV plays struggling quite a bit. How about
Yeah,
an EV play that's working then? That
exactly,
sounds like a good
exactly.
opportunity to me.
Kind of
All
bucking that
right.
trend.
My
What is
my
your
second
next pick?
chart then. Yeah, we're going pretty defensive here, and I would say there are a couple thoughts here. So I'm just talking about utilities, the XLU, and again, utilities are one of those areas of the market. They're not sexy, they're not juicy, but they're a place you want to be when you want to avoid owning other things. And a
Yeah,
lot of my time was spent working with institutional money managers who have to be fully invested at all times. So they have to own stocks. 90 some percent of their portfolio is going to be in equities. So when the market gets uncertain, when you have a lot of volatility, you find places to hide out and you find ways to maintain that equity allocation, but be in things that either provide you additional income and or provide lower volatility, cushion you from market downside. So if the market does rupture, which there's a non-zero risk that the market goes down a lot more than it has already,
hmm
you want to start to find things that are going to help you ride out that sort of period of uncertainty. And I think utilities sort of provide a number of positive qualities that I mentioned. Number one, decent yield, right? So a higher
yeah,
yield in the XLU than the S&P 500. And if you look at individual names, there's plenty of names in there with an even higher dividend component. So there's a good income component. Number two, the volatility is incredibly low. And when you're looking at a charting platform like a Stockcharts, we always make the chart stretch out so it fits the viewable area. But if you would do it on a standard volatility scaling, utilities are pretty low volatility compared
yeah.
to something like a biotech or technology. So they're relatively stable, right? The chances of them going down aggressively are fairly low. And the third thing is utilities are actually starting to outperform a little bit on a relative basis. The relative lines at the bottom, it's not blow the lights out, impressive just yet, but it's not underperforming anymore. It's actually hanging in there with the market. One of the danger signs I look for at a major market top is an improvement in defensive sectors like consumer staples, real estate, maybe healthcare, and definitely utilities. And out of those four, utilities probably the most impressive. What's interesting from a purely technical perspective on the XLU is it's been below a downward sloping 200-day moving average for quite some time until about 6 to 8 weeks ago when it finally broke above in early March and now has pulled back and retested the moving averages from above. So overall, you're seeing a bit of a positive rotation after a higher low in February. I think this is a great place to sort of diversify away from growthy stuff that probably a lot of people has become a bigger and bigger part of their bets. That's where you're seeing a lot of weakness right now. I think focusing on value-oriented parts of the market with higher income components and starting to show improved relative strength. I think that's a great way to ride out a period like this and just make sure you're cushioned to potential downside. So utilities seem like a decent bet in April.
There's a lot to like on this chart too. God, you got some good picks here. I mean, this is another thing that's kind of sticking out to me. You've got that failed breakdown basically in
Mm,
October, and off of that
yep.
October bottom, this is a hell of a trend here. Moving. I mean, now we're
Mm,
sort of printing a bounce right off the convergence of those two moving averages too, but also kind of off that trend line if you draw that sort of visually across.
mm.
Really nice move here out of utilities, and I like what you're saying about picking up some yield too in a time of a weaker market. That makes a lot of sense. It's a
Yeah,
great
and
chart.
and definitely, and again, the other thing to remember is from when you think about a portfolio level of your of what you're holding,
Right.
as things have been dominated by growth, that's probably for a lot of people, they've probably not been very diligent about lightening up some of those positions because it becomes a bigger and bigger weight. So you're very overexposed to correction in growth stocks. So now's a decent time to be taking some away from there and maybe rotating more defensive positions. That would be my take.
Absolutely. I think it makes a lot of sense.
Your second chart, Grayson.
My second chart, DK, is going to be, well, somewhat similar here. I'm sticking with the sector as well, and that is going to be energy, but I'm doing it a little different here. We've got the equal weight energy ETF. That's RSPG. So the interesting thing to me about energy, right, is that you've got so many different names in that space. And when we do see that sector strengthen, it's a little bit like industrials. You actually kind of end up with the love pretty well spread out across those energy names. They really kind of move together a lot more than some other sectors, especially something like consumer discretionary that's just got so much sort of natural diversification in it. So I like that if you're going to see this pick up in energy, you kind of spread the love around with an equal weight flavor. So that's what I'm sort of picking here as my second name. I also just like the move out of this. I mean, kind of like you're talking about, we're seeing a little bit more defensiveness. We've been seeing a lot of talk, obviously, about rising oil and gas prices and how that's going to affect these energy players. So this has been a sector that's just been quite strong. We are seeing this thing pull back a little bit, but frankly, we had such a monster run there, especially in February and March, that this is just a really healthy pullback. Is below the 20-day, but got so far extended off of those other moving averages that I think that's totally fine. And it's still sitting above that breakout level. So I would look for this thing to consolidate even a little bit more, come down, hopefully kind of bounce off the 50. I'd love to see that 50 catch up a little bit more. But once again, you're seeing a sector that is outperforming the rest of the market. That's the kind of thing that I like to see. And you're seeing kind of broadly distributed strength out of energy relative to everything else out there in the market. So an interesting space to watch right now. Again, not quite as high as XME, but a very strong scooter score right now too. So this is one of those corners of the market that's just stronger than everything else. When you see a scooter score 76.1, that means this is in the top quartile. It's outperforming basically 76% of its peers throughout the rest of the market. So a very strong space. I like what I'm seeing here. Also like that the moving averages are all lined up in the right direction. You've got the 20 above the 50, above the 100, above the 200. To me, that is a thing of beauty when you see those things all pointing up, heading in the right direction, and sort of properly positioned as well. So lots of love. I think energy is a really interesting space to watch right now. I can't pick 5 different energy ETFs or 5 different energy stocks, so I've gone with the equal weight, but there's a lot of different energy names and energy ETFs that are really working right now. So interesting.
I love that pick, and to be honest with you, when I'm picking, how we do this is I pick 5 and you pick 5, and then we come together and see what we did. I almost picked an energy thing and I didn't. And as I was sending you my names, I'm like, I actually hope you're picking an energy stock, because it's such a great space to talk about right now because of the resurgence in crude oil prices. And given the fact that geopolitical situation, things are escalating in the Middle East, more and more participants, that usually doesn't lead to lower oil prices, generally speaking. So, I mean, I think there's an elevated risk of oil prices going up. That's going to benefit these types of stocks. And I love how you're describing the equal weighted ETF. I mean, the XLE is one of those. Many of those ETFs are very top heavy. So Exxon and Chevron are probably 40% of that ETF. So you buy the XLE, you're buying those 2 integrated names and then a bunch of other stuff. This gives you broader exposure, and some of the best charts are not those 2 biggest names. They're sort of in other subgroups within energy. So I like that, and with a decent pullback, maybe an actionable entry point. I think that's a great approach.
Ideally, we'd see kind of a breakout retest bounce kind of thing. We're still a little bit off of there. We'd have to come back down another about 4% here to get to sort of a true test there. But still a lot to love. And if you're looking for strength, if you're looking for a corner of the market right now that's actually working, energy is kind of one of those spaces. So okay,
quick stock charts tip. How did you just do that? Where you drew the line and showed the percent change? Because that was awesome. Is that with inspect on?
Up here, make sure that you have the inspect crosshairs tool on. You can actually hover over this little icon here on our new workbench and get a little description of that. But if you click and drag vertically, you can measure in either direction. So you can see basically on a really quick click and drag, you can see that we are about 9% above that breakout at the highs there. Right now, we're only about 4% off. You can see we've got another 4%, 4.5% down to get back to that breakout level. You can measure all that stuff. And you can also measure horizontally. So if you want to measure how many bars, do some bar count, things like that, how many periods are in a specific pattern, you can also measure horizontally. So a couple nice things. Plus, my favorite part of it, it gives you that little floating menu. So if you want to hover over any candle and see exactly what the open, the high, the low, the close, the volume were, just hover over the chart. You're going to get that little box, and it tells you the exact date as well. So really, really nice little tool, that inspect tool.
I love it. All right, my third pick. So gonna sound familiar to you because you're talking about metals and mining, and I'm going gold miners. So
there you go.
I also love when we double down on a particular bet here because that shows you we're seeing some similarities.
Yeah.
With the discussion of energy, you mentioned copper stocks, and I would put gold stocks in there as well. I think this is part of a broader resurgence in the commodity space.
Yeah.
Commodities have not been a particular area of strength. It's been growth over commodities, over value, all those sorts of things. Those sort of themes are starting to shift in a big way. When I was scanning this morning for stocks making new 3-month highs versus new 3-month lows, very few new 3-month highs, but about half of them were gold stocks. Things like Agnico and what else? Kinross, KGC, and others, and these are the types of names that are held in GDX and the gold miners ETF. When you're looking at like the energy space, when I'm looking at gold, I think you have to make a decision as an investor. Do you have a particular edge or a particular sense of individual names and opportunities, or is it more of a broader idea, a broader thematic play? And for me, gold is less about individual miners and where I think there's opportunity. It's more of the idea that I see gold prices making new highs. I see gold stocks finally catching up to the strength that we've seen in gold prices. And I think spot gold has been relatively strong. Gold stocks have not been particularly strong in light of that. But now you're actually starting to see that. And really since the end of February, you're starting to see gold stocks really move to the upside. You see the relative strength at the bottom with the GDX really starting to outperform the S&P. That's not something we've seen really since the beginning of 2023, about a year ago. And so, you're really starting to see an area of the market that had been, sort of dormant, sort of not participating, really starting to improve. And again, the upside for gold is the fact that in general tends to be a decent safe haven. We haven't thought of gold as a safe haven necessarily, and it wasn't essentially a very good inflation play when inflation was really starting to be an issue a couple of years ago. But I think now you're starting to see it, and when the charts tell you the area is improving, that's what I think you want to. That's what you want to buy into. It's recently overbought. The GDX had popped up pretty good, and it's testing resistance from April, May 2023, and so I think you're sort of pulling back off of that level. I think a breakout above there is a pretty good confirmation. But I'd be happy taking a position now and betting on that move higher, buying in on short-term weakness. It's interesting to me that both energy and gold stocks kind of pulling back recently and maybe setting up for the next leg higher. I think that could be a decent play.
Yeah. I mean, I'm always talking about it. Draw horizontal lines across your charts, right? The inspect tool kind of lets you do that on the fly. And this is just a thing that's got some beautiful horizontal lines to it. Refuses to go lower. Maybe stalling out a little bit near new highs. But, this is a thing that's just been consolidating sideways. And if we can get that breakout, this is a fantastic pick. I like that space. I almost picked some gold stuff, but went for a little bit broader with metals and mining kind of all lumped into one. But great selection. I like you said, doubling up. When you and I double up, I always like to see that.
It's usually a good signal.
Yeah.
All right, your next pick, Grayson.
Okay, well, speaking of doubling up here, my next pick is going to be an individual name out of the energy space. I got to pick a couple of individual stocks here. So COP, ConocoPhillips, really trying to make a breakout here. And that's what typically, when we do this show, during times of strength, typically the things that I'm picking are names that are breaking out. That's what I like to see. I like to draw those horizontal lines, as I'm always saying, and find those things that are breaking out. Lets me, really manage risk against those horizontal levels. COP, if we actually pull this back out to maybe a 2-year chart, you can really see this breakout here. We're trying to break out above those highs from kind of the end of 2022. Getting slapped back down just a little bit, so I do want to see some buying pressure come into this thing. But overall, we're also outperforming the market here. We're in a space that we've just talked about that we know is strong and strengthening and outperforming everything else. And this pullback so far is really just to the 20-day moving average. you can see this has been an absolute flyer of a move here for ConocoPhillips. And so getting sent back down to the 20, not really a thing that concerns me. What I want to see now, since we're kind of right up around that breakout level, I want to see us bounce right around here. If we can actually start to move higher here for COP, I think that is a beautiful trade. Again, allows you to really kind of manage your risk against that level. You've got some moving average support. You've got some price support there with prior highs kind of potentially turning into to support for the stock. So a lot to love, I think, here for COP, especially considering that it's backed by that sector strength coming out of energy. Now, this is one of the bigger names, obviously a $151 billion company. Like you said, when you look at XLE, it is pretty top heavy. This is kind of one of those names that makes XLE pretty top heavy, but gives you a little bit of yield. Nice breakout, nice sector strength. There's a lot that I like here about COP. So some other smaller energy names also setting up really well and working pretty good. But I think that COP, especially if we do see those rising gas prices, rising oil prices, COP poised to benefit, and technically just a lot to like on this chart here.
Maybe this is a good time, Grayson, because I think with a lot of charts, ConocoPhillips and many others are having that pullback here recently. With growthy stuff, you're seeing it a lot more significant drawdowns in like consumer and other places. But how do you, in your process, because you do a lot of work with individual names and positions, how do you differentiate a brief pullback that is constructive versus the beginning of a much bigger drawdown? Is it looking at the 20-day EMA, which I know you have on the chart? Is it another level, or is it, how do you sort of manage the risk when we're sort of in a pullback phase?
I will say one part of it is using candlesticks. I love candlesticks because I studied economics years ago in college, right? And the thing that they teach you, Economics 101, it's all about supply and demand. Candlesticks let you visualize supply and demand by identifying whether or not they're solid candles or hollow candles. I kind of alluded to that earlier. We talked about some big, beautiful hollow candles. When you see a hollow candle, it means that the close is above the open. And you can have a close above the open on a down day or on an up day. So the opposite is true too. If you have a solid candle, obviously the close is actually below the open. What that means is basically during the session, are we actually sending the thing up during the session, or are we sending the thing down during the session? I do a lot of analysis on exactly how the candles look. So I will say something like this, when we're seeing a whole bunch of solid red candles with COP getting sent back down, that means that we're going lower on the day, and we're also going lower sort of during the day itself. Investors are selling that thing off during the session. That is very different from the run higher here, where you see COP, jumping up every single day in the morning, opening the session higher, but then also going higher during the session and closing above where it opened. So I think candlesticks are a crucial tool for identifying exactly what you're saying. Is this the start of something deeper, or is this just a healthy pullback? So something like this actually does kind of scare me a little bit when you see those ugly solid candles there. But again, it's a combination of a bunch of things. So where are we relative to past price history? Where are we relative to support and resistance? Where are we relative to those moving averages? We can actually see here, we're off the lows, and those lows were right below that 20-day moving average. So far, we're actually holding that moving average. That gives me a lot of confidence, and still, sitting above some of those key levels. So it's kind of a combination of a couple of factors, but candlesticks definitely a part of it for me.
Oh, great call. I love that. And especially you mentioned earlier about multiple timeframes. I think candlesticks a lot of times provide a really good kind of short-term, what I call like a tactical time frame. They tell you a lot about, I think they can inform your understanding of sort of the bigger picture of what's happening by thinking of the sentiment that builds over time. Well said. I like that. All right. My fourth pick. We're going to the financial sector. I think this is the first financial name that we have.
First one.
It's, so this is a tough one for me. And I would say I'm not picking the XLF because we're coming through earnings, banks in particular, not looking particularly strong. You have a lot of them that have come down quite a bit. I think Schwab has been a bit of an outlier that's actually held up through the sort of, beginning of Q2 earnings. What's interesting about financials, and you'll probably get a sense with the picks that I've given us. A lot of these are partly technical picks, but also they have a macro implication, right? Yeah. And I think, one of the issues for those of us, going through a home purchase potentially here very soon, rising rates are an issue, right? And so I think you're seeing, interest rates kind of pressed to the upside. We had Chairman Powell earlier this week, imply or, sort of softly suggest we're data dependent. Inflation's a little overheated. Maybe there are less cuts. Maybe we move the starting point down a little bit. The market overall is taking that as kind of a negative sense. But if and when interest rates go higher, or certainly if they remain higher, that generally speaking is good for banks, and that's good for the financial sector. Schwab is one of those that's actually held up particularly well. What I like in particular about Schwab, two things. Number one, from a technical perspective, the breakout above $70 a share, which I think was pretty important in March. We've now pulled back and we've tested that support level now from above. And so 70 is sort of that nice short-term level to pay attention to. I think a chart like this holds the 70 level. It's a pretty good breakout.
Yeah.
You fail there, then you have to maybe reassess it. But for now, that's sort of my immediate line in the sand. And just recently, we're sort of holding that breakout level. The relative strength is improving. And I think that's a consistent, factor with most of the names that you and I have talked about, is that the relative strength is improving. I think there's a lot to learn there about why relative strength matters, particularly when the market is in a period of dislocation. Looking for areas that are outperforming in any way are usually going to help you beat the market on the downside. And names like this that are actually breaking out when the market in general is not is a good opportunity. So there's sort of an echo of Murphy USA in my head as I'm looking at the chart of Schwab, and there are not a lot of financial stocks that look particularly like this one, which is why I think it's a good sort of macro bet on interest rates remaining high, but it's a good technical bet in that it's holding up at a time when others are not. I think it could be an interesting opportunity here.
Yeah. No, again, I love the support and resistance analysis on this thing. It's an interesting space, and definitely the rising rate environment, how that impacts financials is a great point. It's been a bit of a tricky space to play in the last couple of years, but definitely some nice winners in there. I like that pick, DK.
Let's do it. What's your fourth one?
All right, my fourth pick is going to be Raytheon RTX. Kind of similar concept to what we were talking about with COP. If you draw those horizontal lines across the chart, this is just a really, really nice breakout on some strong relative strength. I like to see this thing outperforming. Obviously, there's a theme with industrials, defense, aerospace, all that stuff right now with some of the things that are going on around the globe and in the Middle East. So one of the names that kind of comes across the screen with all of that stuff going on in the world. But when we just think technically about this, you can use that inspect tool, put that line across the chart. You can see that we are making a breakout. We've kind of made that a couple of sessions ago, and now we've been kind of chopping around, consolidating around that level just a little bit. We've come down and bounced off it a few times. We're doing that above some key moving averages. And once again, I've got those moving averages lined up in the right order. You can see that 20 above the 50, above the 100, above the 200. That 200-day is also starting to curve to the upside, starting to bottom and move higher, and all the other ones are heading higher. So I like the relative strength. I like the breakout on this. Gives you some nice risk-reward levels to play with. And the space kind of, unfortunately for the world, but fortunately for us as technicians, the space does make a lot of sense right now. So RTX makes a lot of sense to me here as a chartist. Also a strong scooter score. I'll point that out once again, 93.3, and has some yield. This is a big name, $134 billion market cap, but does have some nice yield to it. Strong scooter, nice breakout. There is a lot going for this thing when I look at it technically. So RTX, my fourth pick there.
I like that pick, and full disclosure, I didn't pick General Dynamics GD, but that probably was number 6 or 7 on my list. I almost made the cut. So I'm glad you did Raytheon. I think this particular area, sort of the aerospace defense, really improving on a relative basis, which is what I like. They've had really good runs, but they're sort of consolidating right now and not really, selling off aggressively on your charts, holding above the 20-day EMA, just in a nice kind of position of strength. So again, a chart like this, you wouldn't think the market is it feels as vulnerable as it feels right now. This sort of gives the sense that conditions are pretty strong. So charts like this that are working, I think that's a fantastic bet. And again, another example where the relative strength really shows you why you want to be in areas of the market like this.
Exactly. And that's the key actually to me when I look at a chart like this is when you think about the indexes getting hammered and moving to the downside, pulling back, right? Look at the things that aren't doing that. Look at the things that are just kind of stalled out and moving sideways. You can see that with a relative strength line, but you can also see it just by looking at the actual bars on the chart and saying, is this thing following the market lower, or is it actually holding up pretty well? This is a case of that, right? You're seeing this thing just kind of drift sideways, chop sideways up near a breakout level as the market actually does the opposite and gets hammered and pushed lower. Things that kind of buck the trend of the market and actually stay pretty strong, those are the kind of things that I like to pay attention to.
It's cool to watch. It's cool to watch how you are using Stockcharts to go through this analysis. You get to watch how I do it. And one of the things I take away when we do this exercise, I love how you have the relative strength at the top of the chart. So that's the first thing that you see. So gentle reminder to all of the viewers. Remember, you can put indicators above the price action. A lot of times, if you really want to focus on something like that, that's actually a really good way to do it. Is particularly if you're reviewing a bunch of charts. I think that's a great design to how you're doing it, a great chart style.
And you and I both use the price performance indicator, which actually puts it in percentage terms. That's a really, really nice little trick. But you set that indicator, you do $ symbol, that's going to pull in that kind of root symbol off the chart, and then colon whatever your benchmark is. Yours is SPY, mine is VTI. You said, you can position that above or below. And one other thing that's subtle that I actually like is I set the height to 0.05. So you can see that indicator is actually a little bit taller. 0.05 means it's basically going to be half the height of the price panel. Just gives that relative strength line a little bit more height to work with. Makes it a little easier to see. So a couple little tricks there. I like that you're pointing that out.
Thumbs up on the chart style, Grayson. Yeah, all right, my final pick in my inferior but still attractive chart style is probably not a surprise. It's a common name, but it's Amazon.
I love this.
And I will tell you, and again, consistent with all 5 of the charts that I'm bringing up, there's a technical component, then there's kind of a macro component. The macro component to something like Amazon, besides the fact that it's just a conglomerate that has done well consistently over time. Here's the thing with Amazon. As rates are going higher, that can be really dangerous in this kind of environment, particularly as we're going through second quarter earnings. You're going to find a lot of companies that have to deal with higher borrowing costs, right? If you're in an aggressive growth phase, you're borrowing a lot of money to build new things, to create more widgets or whatever you do. Amazon and Microsoft and other big growth names like this are sitting on a ton of cash. So Amazon probably immune to higher rates. Like, they don't really have to be borrowing money at the moment. They've got plenty of it. And so other companies are going to struggle with higher rates. Amazon probably not going to be a factor for them. And I think the chart is reflecting that along with other things. The reason why I think this is a great chart to mention is one of the charts to watch now. Not just whether it's a good chart to own, which I would argue it probably is, because it's going higher and it's above upward sloping moving averages and the momentum is consistently strong and it's outperforming. All those things are true. But also the fact that I think it's important, if this market is going to strongly deteriorate, if you see a lot of weakness in the S&P and the NASDAQ, I think that only happens if the Amazons and Metas and other leading names really start to struggle. Yeah. So I would be laser focused on these charts. A lot of these charts have bearish momentum divergences. Amazon actually doesn't. It actually recently was overbought as it made a new push to around $190. So I think relative to the other sort of magnificent 7 names, it's probably in the strongest position of all of them. But I think it's important to watch. If stocks like this can hold a 50-day moving average, this market pullback is just probably not going to be that painful because there's enough market cap represented there that is still showing strength. Names like Amazon break their 50-day following a lot of other names that have already done so. I think at this point, it's probably 35% of the S&P still above their 50-day moving average. It might be a little lower than that today. So a lot of things have broken down. These charts have not. So stick with the names that are holding up. Stick with the names that are consolidating but not breaking down. And for now, Amazon fits that criteria. So I think a good play for higher rates, a good technical play in the fact that the momentum and the relative strength have remained strong. So if I had to own one of those sort of FANG stocks, it would probably be Amazon here.
I completely agree. And I tweeted this out a couple of weeks ago. This is the name that no one is talking about that we all should be. Look at this thing on a 5-year chart. Yeah. I mean, it's just getting back up there to new all-time highs. If it can hold, like you're saying, hold that 50-day and bounce higher, I mean, there's so much to love here for Amazon, especially thinking out long-term, not just short-term tactical, but also kind of long-term. Oh, man, this is a great, great pick. So much to love about Amazon right now.
And a number of things we've talked about have had improvements in relative strength, like your Raytheon chart just
Yeah.
recently. Look at the relative strength line at the bottom from the end of 2022 through today, just
Yeah.
pretty consistently up and to the right. I mean, having a portfolio of names like that, you're going to outperform the S&P by definition. I mean, that's literally how you do it.
Yeah.
So I think it's a good chart as long as those conditions remain how they are.
Amazon making new highs. I love it. That's a good pick. All right, DK,
Your
my final pick is going to be different for me.
final.
This is very
Wow.
different for me.
Okay.
So I
Okay.
teased you earlier about picking a consumer discretionary name. Here I'm picking a consumer discretionary name. I've got YETI. Okay, and my thesis here on YETI, doing something, like I said, quite different for me. Not a name that's got strong relative strength. Not a name that's breaking out. Not a name that's trending higher. Not a name that's got the moving averages in the right order. There's pretty much nothing that I like on this chart except for one thing. I'm going back to my old friend, the horizontal freaking line. If you draw a horizontal line across this thing, look at that. It refuses to go lower. And some of these candles, I mean, talk about supply and demand analysis. Look at these hollow candles. These are huge, huge intraday moves coming out of YETI off of those lows. Every time they try to send YETI back down to these kind of low to mid 30s levels, this thing pops back up and gets sent higher. A little bit like what you were seeing on the gold miners chart. You're seeing something that's just consolidating sideways. It refuses to go higher, but it also refuses to go lower. And that to me is actually key for YETI. When I think about YETI too, you know, they make coolers, they make mugs, they make, I think they even make like bags and stuff now, but it's all outdoorsy, summery, you know, go outside and enjoy nature kind of stuff. So we're heading into, you know, a summery time. I'm sure that they see their sales pick up and things like that in the time of the year when people are getting outside. But technically, I just like that this thing refuses to break down. And when I also look at it in two other ways, I like it. I'm going to pull up a little multi-time frame analysis for us here. We've got the longer term weekly. This is about a 7.5-year weekly. And look at that. Look at where that thing refuses to break down below. It's the prior highs from when this thing first went public. We had kind of this really big failed breakdown and it shot higher. I think that was on earnings. You can see that this thing absolutely refuses to break down below prior resistance. Other than that kind of one failed breakdown. So I like this thing on the long term. I think, again, you've got some really, really interesting risk reward levels to play with. The other thing that I would bring up that, again, is very different from me. Now we're going from a really long-term weekly chart to a very, very short-term 75-day, click the wrong one, 75-day chart here. So this is 75 days worth of data, 1 minute per candle, minute-to-minute chart.
Whoa.
So really, really short-term, really, really funky chart. This is what I look at on a short-term basis when I'm going to actually place a new trade. I'll look at this to figure out what's going on kind of with the money flow, accumulation, distribution, the institutions play in this kind of thing. So when you see a chart like this that's gone down, right, that is objectively going lower over the last 75 days. But down here, you've got accumulation, distribution, and on-balance volume going up. That means that overall, over the last 75 days, even though this thing is getting sold off, it's actually being accumulated. People are buying this. Combine that with the look that we had on the daily chart where it's, you know, pinging off of those lows once again. And that means that people are starting to accumulate this thing once it gets down to the bottom of that range. So I think this is an interesting chart to watch for the next month and potentially even longer. There's a lot of interesting things here. And again, some horizontal lines, some multi-time frame analysis lets you see a couple of interesting things going on for YETI. So
wow, that is a very
right?
un-Grayson Roze-like chart, but I think but well pitched. I like the argument. It's
Thank you.
I mean, with a chart like this, I mean, it strikes me this is something that's obviously struggled so far in 2024, while a lot of names have done well. But
yes,
it's testing support, and a lot of names are so far above key support levels. You see a lot of potential downside.
Right.
The risk reward, if you think of it that way, limited downside, assuming we can hold those previous lows, but plenty of upside. Even if we just get to retest some of those previous highs, that's a pretty nice improvement from where we're at.
Right. Even if you bang off of those lows and you just kind of get back up to the top of the range, I mean, that's a 40% gain if you get back up to the top of this range. I don't know about you, but I'll take a 40% gain. That sounds pretty good to me.
that might be a fantastic play in the next quarter if we could pull that off. And I think the other thing with something like YETI is, remember, as much as we often talk about charts and say, you know, is like, do you want to do you want to own it or not own it? What we have to remember is you have a lot of other levers you can pull
Yeah.
between taking partial positions, laddering into positions, as you've talked about before, even using options, right, as a way to, to play potential upside and limit your downside. It could be an interesting area to take more of a like a speculative position,
Yeah.
and see how it goes, and then add to it if it plays out as you might expect. But
Absolutely.
Interesting. So Grayson, as we wrap this up here, neither of us picked any technology stocks. Is that right?
That is
might
true.
be a
I
first.
almost did. I almost put
Yeah.
Shopify in there. I got to say,
Yeah,
Shopify was
okay.
kind of my one that I was thinking about. But yeah, no tech. A lot of metals, a lot of mining, a lot of rocks and hard stuff.
It's a sign of the times, right? It's
I
sort of
think
like
it
a
is.
rocks cover paper kind of moment,
Yeah.
where you're finding, again, as we're looking through these names, you're finding parts of the market that we've not normally presented. Just, I mean, the charts are telling you, and I think that's what's a
Yeah.
great takeaway from this. You and I both do our own process, a lot of scans. When I'm scanning for things that look constructive, these are the types of areas of the market that I'm seeing that. I think that tells you a lot about the conditions where
Yeah.
maybe potential opportunities might be, right?
You know, we're talking a lot about scanning too, and that drives a lot of my process. So one thing that I just want to point people to here in our last minute of the show, if you are a Stockcharts member and you jump over to the scanning tools, look for this link up at the top, Sample Scan Library. This is going to let you get started with scanning, running some of these things that Dave and I are talking about, scans for new 3-month highs. You can do that right here simply by clicking one button. Big green button, give it a click, you're going to get stocks that are making new 3-month highs. You can also use this to kind of start editing those scans yourself, make them your own, add your own syntax and things like that. Look for this page, look for this tool, and down here at the bottom too, we continue to add to this and bring in more and more things. We've got some scans from Dave, we've got a whole bunch of scans from me that are basically just new highs in the S&P 1500. But this resource has really sort of lowered the bar on what it takes to get started with scanning. So definitely look for that thing. If you like what Dave is talking about with 3-month highs, this is the place to go to start finding those lists. Very, very easy.
No, well said. And especially those relative highs. That might be a really good place to be looking in this
Relative
sort of
highs too,
environment.
yep.
Grayson, this was fun. We'll do it again next time, shall we?
I think we shall. This was a lot of fun.
Awesome. Thanks, Grayson. Hey, everyone. I'm Dave Keller, the Chief Market Strategist here at Stockcharts.com, joined by Grayson Roze, also of Stockcharts. It's been a pleasure to talk with you about some of the key charts to watch in April. Make sure that you click in the first comment below. We'll have a link to the chart list that we reviewed today. And happy charting and good luck in this environment. Take care.